3 days ago, the government started handing out $1,000 per child, and 4 million kids are already signed up. It's called a Trump account. It went live July 4th, and most people are getting the biggest part of it completely wrong. Because the real money here isn't the $1,000. It's a move your kid can make at 18 that could make the whole thing tax-free for life. Let's break it down. First, the mistake everyone's making. People hear free $1,000 and think it's a savings account. Money you can pull out for a car, a vacation, an emergency. That's wrong, and treating it that way leads to disappointment or bad decisions. Here's what the law actually says. This is a long-term investment account built for your child's future, and in most cases the money is locked until they turn 18. Now the free money, precisely. If your child was born between January 1st, 2025 and December 31st, 2028, and is a U.S. citizen with a valid Social Security number, the federal government deposits $1,000 of seed money into their account. That's the pilot program. $1,000 per eligible child from the government. You just have to claim it. And here's how you claim it, straight from the IRS. This is Form 4547, Trump Account Elections, a real form, brand new, December 2025. Parents use it to request the account and enroll in the pilot program with their 2025 tax return. The official portal is trumpaccounts.gov, and type that address yourself, because lookalike scam sites are already circling anything with free money in the headline. Older kids aren't left out. The Michael and Susan Dell Foundation pledged $6.25 billion to deposit $250 into the accounts of children born 2016 through 2024 who live in zip codes where the median household income is under $150,000, a group of roughly 25 million kids. If that's your child, that's a contribution rules, because this is where the account gets real power. Families can add up to $5,000 a year. Those contributions are not tax-deductible going in. This isn't a 401k. But here's a sleeper benefit. Your employer can contribute up to $2,500 a year for your child, and that money doesn't count as taxable income to you. The employer piece counts inside the $5,000 cap, but the government's seed money and charitable deposits like Dell's don't eat into it at all. So what happens to the money? It gets invested in low-cost stock index funds and grows tax-deferred. No tax bill on the growth year after year. And this is where the numbers get fun. Take just the free $1,000, add nothing, ever. At the stock market's historical average of about 10% a year, by retirement age that single deposit compounds to roughly $500,000. One deposit, zero effort. Now add the number that makes this achievable for regular people, $27 a month. That's $324 a year, a streaming budget. $27 a month on top of the seed money. At that same historical average, and your child crosses into multi-millionaire territory by retirement, roughly $2.5 million. Not from wealth, from $27 a month and 67 years of compounding. Here's the trade-off to know honestly. Taxes are deferred, not erased. Your own contributions went in after tax, but everything that was never taxed, the growth, plus the free seed and any employer money, gets taxed when it eventually comes out, like a traditional IRA. Which brings us to the whole reason this video exists. At 18, the account legally converts into a traditional IRA in your child's name. And that unlocks the single smartest move in this entire program. The pro move, the Roth conversion. At 18, most kids have little or no income. They sit in the lowest tax brackets of their entire lives. That's exactly the moment to convert the traditional IRA into a Roth IRA. Yes, the conversion triggers tax on the untaxed portion, the growth plus that free seed money. But at an 18-year-old's bracket, that tax is tiny, sometimes near zero. And after the conversion, every dollar of growth for the next 50 years comes out 100% tax-free. Run the play start to finish. Seed money plus small contributions grow tax-deferred for 18 years. At 18, a gap year, a college year, a low-income year, the account converts. Your kid does the Roth conversion and pays tax on the untaxed portion at maybe 10 or 12%, possibly less after the standard deduction. Then 5 decades of compounding happen inside a Roth, and retirement withdrawals are tax-free. Same dollars, wildly better ending, because of when the tax got paid. Quick comparison people keep asking. What about a 529? Different tools. The 529 is for education, tax-free when spent on school. The Trump account is for retirement. With the free government seed, the 529 will never have. If you can only do one and college is the goal, the 529 still fits. But free seed money plus the Roth move makes this account something genuinely new. A retirement head start measured in decades. Your action list. 1. If your child was born 2025 through 2028, claim the $1,000. Form 4547 with your 2025 return or through trumpaccounts.gov. 2. Born 2016 through 2024? Check the Dell Foundation eligibility for the $250. 3. Even $27 a month changes the ending. And 4. Put a note in your calendar for their 18th birthday that says 2 words, Roth Conversion. Quick recap. Trump Accounts went live July 4th. Born 2025 to 2028 gets a free $1,000 seed. Dell adds $250 for millions of older kids. $5,000 a year max. Not deductible. Employer money is tax-free, and it's locked until 18, when it becomes a traditional IRA, and the low-bracket Roth conversion can make it tax-free for life. The free money is nice. The tax timing is the fortune. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure here is checked against the IRS sources. It's always educational, never advice for your specific situation. Bottom line, the government just planted a seed for your kid, but seeds only become fortunes with time, small deposits, and one smart tax move at 18. Claim it. Automate $27 a month, and teach your kid the 2 words that make it all tax-free. This is general education, not tax advice. Details like the conversion rules are still being refined in IRS guidance, so check with a pro about your situation. Subscribe to the Tax Breakdown for simple tax-saving tips before you file.